The bottom line is that for 20 years, we suppressed interest rates. By suppressing interest rates, we created this perception or this illusion of prosperity. If you have suppressed interest rates, why then you have to step on the price of gold, because by stepping on the price of gold, it signals strength in the underlying currency, strength in the bond market, as illusionary as it would be. Because if you are going to have nothing in the way of interest rates, of zero on the federal funds rate for all of those years, then there's no opportunity cost in buying gold and silver. And that's one of the reasons why they would step on it, to promote an illusion of strength in the bond market and in the dollar market. And what it really is it's a barometer on the health of the system. The higher the price of gold and silver goes, it shows the flaws and the fragility in the underlying markets.
Gold prices are experiencing a significant uptick in midday U.S. trading on Thursday, driven by a combination of safe haven demand, weaker U.S. economic data, and a dovish stance from the Federal Reserve. This surge comes against a backdrop of heightened tensions in the Middle East and growing expectations of potential interest rate cuts by September. AndySchectman, a prominent figure in the precious metals industry and president of Miles Franklin Precious Metals, offers insights into the complex dynamics. Schectman argues that gold prices were deliberately suppressed for an extended period to maintain low interest rates, projecting an illusion of strength in currency and bond markets. He contends that rising gold and silver prices expose underlying market fragilities, challenging this narrative. Schectman's perspective illuminates an intriguing dichotomy between Western market practices and global trends. While Western markets allegedly suppress paper prices, other countries are increasingly focused on acquiring physical metal, potentially signaling a shift in the global precious metals landscape. Daniel Gali, a senior commodity strategist at TD Securities, further emphasizes this evolving market dynamic. Gali notes a significant change in the gold market compared to recent months. He points out that discretionary traders maintain larger positions than typically justified by current rate market projections for Federal Reserve cuts. Commodity trading advisors have reached a max long position, suggesting limited room for further expansion without releveraging. However, the global picture remains complex. Despite persistent central bank buying activity, Asian markets have shown reluctance, with only nascent signs of renewed interest in recent sessions. Gali attributes this to price movements in Asian currencies, which have diminished the appeal of precious metals as a hedge against currency depreciation. Please tune in for our exploration of AndySchectman's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
For a very long time, it was done for something called Gibson's paradox. Gibson's paradox is the inverse relationship, in essence, between real interest rates and the price of gold. And if you are going to maintain an environment of very low interest rates, see, it's the interest rates, it's not the gold manipulation, Danny, that matters. It's the interest rate manipulation that we've seen for 20 years, where suppressed interest rates have created an illusion of prosperity, where your home prices, your stock prices, your 401k, everything went higher in value. And that's another big problem, by the way, for the commercial real estate industry, where all these buildings were purchased at the lowest interest rates in American history. And now that rates are moving higher, on the long end, what does that mean for these values? And that's another big issue. But the bottom line is that for 20 years, we suppressed interest rates. By suppressing interest rates, we created this perception or this illusion of prosperity. And so if you have suppressed interest rates, why then you have to step on the price of gold, because by stepping on the price of gold, it signals strength in the underlying currency, strength in the bond market, as illusionary as it would be. Because if you are going to have nothing in the way of interest rates, of zero on the federal funds rate for all of those years, then there's no opportunity cost in buying gold and silver. And that's one of the reasons why they would step on it, to promote an illusion of strength in the bond market and in the dollar market. And what it really is it's a barometer on the health of the system. The higher the price of gold and silver goes, it shows the flaws and the fragility in the underlying markets. And I think that's kind of the problem, is that these commercial banks have done this for so long, created such massive short positions, that they're trying to slowly, I think, extricate themselves from these very, very large short positions, some of the largest in the history of the COMEX market. So what this chart is here, this is the COMEX market. This is a presentation I gave at Rick Rule's conference recently. And these are all the commodities that you see. These are commodities traded down here on the COMEX. This is the red line are the top four banks, big commercial banks, and the green is the top eight combined. This is the short position in silver, the largest concentrated short position in any commodity ever traded on the COMEX market by eight banks. You tell me what the hell is that for? Why would look at oil over here? Corn, sugar, soybeans, cotton. Why would you have eight banks that represent the largest concentrated short position in the history of the COMEX? Look at the top four shorts: silver, platinum, gold, palladium. Why are they shorting the price of all of these metals? And that is the question that people need to understand. And so let's look at the next chart. This is how the rest of the world is using this against us. This is the amount of silver held in the LBMA. The rest of the world says, fine, you guys, now that we're wealthy enough and industrialized enough and coordinated enough, you guys want to short the hell out of the paper price? Go ahead. This is what we're going to do. We're going to stand for delivery and drain your exchanges. That's exactly what they are doing.
Yeah, it's next to nil now.
Suppression of the Western paper market against us. They know what we're doing, slowly draining the vaults. So it's now here's the reason I believe, I'll show you one more. Here's a reason that I believe they are doing this with silver.
AndySchectman highlights how central banks, particularly in China, have strategically used Western price suppression tactics. Schectman points to statements from the Shanghai Gold Exchange, suggesting that the real price of gold will only be fully realized when China exerts greater influence in the market. This perspective gains credibility when considering China's remarkable track record in the gold industry. For over a decade, China has maintained its status as the world's largest gold consumer, while simultaneously holding the title of the world's largest gold producer for an impressive 15 consecutive years. These achievements underscore China's pivotal role in shaping the future trajectory of the global gold market. Industry experts, including Tate, anticipate that China's influence will continue to drive innovation in key areas of the gold market. These areas include enhancing gold bars' integrity, advancing digitalization efforts, and promoting responsible supply chains and artisanal mining practices. China's dominance in production and consumption uniquely influences global gold prices and market dynamics. This situation lends weight to Schectman's assertion that the true value of gold may be suppressed in Western markets, with countries like China poised to reveal a more accurate pricing mechanism. Let's get back to the interview.
I don't think that's really been priced in as much into the gold market because, again, fine line between conspiracy and reality. But when you take a look at what has happened, in fact, let me just read to you exactly, if I have it here, what has happened with the price of gold. Price of gold and silver are managed by the commercial banks. And I mean, that's the truth of it. The commercial banks are the ones that control the price of gold. It's controlled on COMEX. That's ending because the big money across the globe understands this. The central banks have been using the Western suppression against us for a very long time. They know this. In fact, I've said before, the head of the Shanghai Gold Exchange says, when the real price of gold, when China is allowed to speak at the table, the real price of gold will be observed. They talk about the new grain exchange that they just developed, the BRICS grain exchange, and they say, we produce more grain and soft commodities than the West does, yet we have no control over its price. It's all controlled on COMEX. That will change with the new BRICS grain exchange. They understand that we have been controlling the paper price of all of these commodities for a very long time. But I'll give you an example of what just happened. I see if I can pull it up here. I was just reading it. There's a tremendous amount of short covering that has happened on the market. And I just want to find it. I'm sorry I don't have it at my fingertips. Okay, here it is. So the Commitment of Traders report just showed that the managed money crowd for gold and silver futures have been fleeced. That was the gist of it. And the gold longs sold 4.488 billion in long futures, silver longs 1.7 billion in futures. These are the managed monies. And so leverage is a double-edged sword. So look, here's the deal. There's the commercial banks. What they do is they suck in the speculation. They let the price run, and they will suck in all the managed money, and they'll absorb all of that buying pressure. but they have enough money where they are able to sell into a rising market. Very dangerous thing to do. Most people, when they short, think AMC and GameStop, they short a falling market and pile on, right? It's like, when you played tackle football with your buddies in elementary school, everyone would jump on, pile on, hog pile. Well, that's what normal people do when they sell short. The commercial banks have enough money and really unlimited amounts, and they do it in a collusive manner where they are able to absorb all of the buying pressure, let the price rise, and then start to sell and overwhelm the buying pressure and drive the price down. As they drive the price down, all of those longs and all of the options expire worthless, and you get all of the managed money that end up jumping ship. These hedge funds do not have a high pain tolerance. So as the price starts to go against them, they jump ship. When the longs sell their longs and cover their shorts, in other words, they are getting out of their short position, they're selling their longs. The opposite side is the commercial banks. They're taking those longs and they're going long. So in other words, one of these days, and I believe we're getting much, 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 much closer to it, the commercial banks, and maybe this is the time, who knows, will flip-flop and they won't short a rising market. They will push all of the managed money to the other side of the table, as right now they're in the process of moving to that side of the table. And they won't let the price, they will not let the managed money back into it. In other words, the managed money will go short. Right now, when the managed money sells their longs and buys shorts, the commercials are taking the other side, and that's what has happened.
The evolving landscape of the global gold market, with China at its center, presents challenges and opportunities for investors, policymakers, and industry stakeholders worldwide. As the market continues to develop, all eyes will be on China's next moves and their potential to reshape the future of gold pricing and trading. Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.